The power of three concept taught by ICT is one of the most powerful ICT concept I've come across out there. You see, the major reason why a lot of you are still struggling with finding directional bias or predicting where the market is supposed to go to, it's simply because you are not able to understand the power of three concepts. And one of the most amazing thing about the power of three concept is that you can use the power of three concept across different time frames, whether you are looking at your chart from the monthly time frame, or you're looking at it from the weekly time frame or the daily time frame. Now, in this video, I'll be taking my time to explain the power of three concept in the weekly time frame. Now, you can check my YouTube channel. I've done that for the daily time frame, but if you are able to understand this on the weekly time frame, you can replicate that on the daily time frame. All right, so let me go into it in detail. Now, for those of you who will want to trade currencies and you are trading with a broker that has 5 days for active trading, all right, this is going to be very handy because you have basically Monday, Tuesday, Wednesday, Thursday, and Friday to trade. And then each of these days makes an exact price movement that you need to interpret. All right, now let me show you an example. This is a weekly movement. This is a weekly movement from Monday to Friday. All right, if I come over here, I just made a sketch of candlesticks and I call these weekly candles. All right, so let's leave it like this. This is a bullish candle. Why? Because it is depicted in a green color. Anyway, the colors does not matter because the colors are just psychological colors to help us know what price is doing. If we have a green candlestick, we call it a bullish movement or a long or a buy. That is to tell us where the direction is going or what is happening in the market within that price action. All right, and then the red is saying price is going negative. It's just a psychological color. But then the most important thing is knowing how that particular candle formed. All right, so a candle starts with opening at this point. When it opens, it moves either upward or downward. Now, if price comes down here first with the body, because while it is printing downward, it will be red, because when price opens and it begins to go lower than the opening price, it is considered to be a sell or a bearish candle. All right, so as price moved downward to this place, it creates the low of that candle. All right, the low of that candle, and then it came back, passes above the opening price, which is this O, and it moved up to this area, to this level. All this becomes a green area, but then something pushes it down inside here and it closes here. So this is considered as a bullish candle. All right, it is considered as a bullish candle and it's a weekly candle. Now the story within this particular candle can be literally seen when we come right here on our sketch. Don't worry, I will take you to my chart to see everything that is happening. All right, the story of this thing, this is 5 days price action. Now I have it broken down here. I will tell you everything that happens across every of this movement. So we have a bullish movement, a bullish candle. In a normal trending market, this is how the entire price action inside this, assuming we are breaking this to see what is inside, we're just breaking it to see everything that has happened inside. So while we are breaking it, this is exactly what we're going to see. 5 days price movement. It starts with a Monday. You see Monday, Tuesday, Wednesday, Thursday, and Friday. Monday starts as an accumulation. All right, we call it an accumulation. So if you have Monday, we call it accumulation. Let me write it. So Monday is simply a range. So what does that mean? If you're coming to trade on Monday, you should be careful because you don't expect so much from the price movement. Basically, what happens mostly on Mondays is to see price just having a range. All right, you see price doing something like this, range going up and down. So those who understand this will basically be trading short time, take here, take profit, come down, take profit. That is the typical example of Monday price action. All right, so the power of three concept is basically called AMD: accumulation, manipulation, and distribution. This is it here: accumulation, manipulation, and distribution. If you are seeing my writing here, let me make it more visible to have the border and then make it a bit bigger. Accumulation, manipulation, and distribution. All right, so Monday starts the accumulation. Why do we have accumulation in the market? Definitely, if the smart money wants to do a move, they need to have as much order as they can get. Let's assume you have $1 billion. You want to buy something. Let's assume you want to buy orange. All right, and the supply in the market is only going to take $600 million. All right, I'm just giving an example. Even though I'm calling such a big figure, it can only take this money. It is not up to $1 billion worth of orange. What do? You have to be in the market to ensure that you have exhausted all the 1 billion to be able to buy oranges worth 1 billion. So that is why the smart money will want to wait for enough people to give them what they want to buy. For example, I'm going bullish. I need people to sell for me before I can go bullish. And then this is the accumulation. It begins to range. They wait for a lot of people to give them access to buy what they have to buy before they take the movement. That is why a range happens in the market, guys. All right. I hope this is explanatory enough. Anyway, if you are looking for this to form, then you must watch carefully for price to do that kind of movement. It's a range. Give us this to buy. Now it brings us to the next day, Tuesday. Tuesday will create either the high of the week, right here is here. It will create either the high of the week or the low of the week, so that we are very sure that if we are taking any trade to go bullish, this is the lowest point price will come to. The one we've seen on Tuesday, we don't want to see price pushing lower than here, except for other fundamental scenarios that may affect the market. All right, and all those things will be factored in by checking Forex Factory calendar or my FX book. These are the things you do to ensure that the week is safe for high impact news. There are basically 5 news you want to stay away from. You have the CPI, you have the FOMC, you have the interest rates. All right, so you need to be careful with this. You have things like employment, anything around employment, and lastly is NFP. All right, non-farm payroll. These are the news you want to stay away from. If you see them coming out, just be careful with them, because they can move so much so that they can affect your directional bias. All right, and one thing about these news, they come out mostly towards the end of the month and the first week of the new month that just came in. All right, so you need to be careful. So Tuesday will create the manipulation. Manipulation is simply a fake movement. Why do we see a manipulation? When the smart money wait patiently for people to give them order to buy, and some people are still saying, no, we don't want to sell it for you here, we want you to come down here so we can sell it for you. Some people have put their stop losses here. This is something I will take time explaining, but if you have watched my video before, you will understand what I mean by that. Every time you're putting your stop loss, you're simply saying, if you are buying and your stop loss is here, you're simply saying, I want to sell if you are coming down here. If price is coming down, I want to sell it. For example, let me go to a typical chart here. All right, let's say I am buying here. This is MetaTrader 5. I may not be able to make sketches. Let's say I am buying from here. My stop loss is here, down here. All right, what I'm saying is that if price is coming down to my stop loss, sell it there. So what the smart money is seeing down here is an opportunity to buy more cheaper than here. I hope you're understanding. It's an opportunity to buy more cheaper than here. So assuming I am buying from here. Where's my data? Okay, I'm buying from here. All right. And then somebody is selling here. Which one is cheaper? This could be $110. This could be $90. So here is cheaper, and that is why they will need to come down here and buy even more cheaper. Assuming you have a plug where you get supplies and you just heard that there is somebody giving a cheaper price or is giving it at a discounted rate. I know some of you people that love to buy things cheap, and you can go to any extent to get them. All right. It's the same product, but then this guy is selling it expensive. And then this guy is selling it a bit cheaper than what he is selling. They will come down. So the accumulation, now they are completely filled up with their order. So they manipulate price to come down here so they can buy from you. And here they take it up. So if we are going bearish, the opposite is the case. Tuesday will form the high of the week. So right here you see the sketch I was telling you. The sketch I was telling you. This is it. So we have the opening starts with Monday, accumulation, manipulation forms the low of the week. This is the low of the week, which is saying the lowest point price will go for the week is right there. I hope this is understandable anyway, but I am trying my best to explain it. So Wednesday, you will see Wednesday coming with something very unique most of the time. Wednesday will locate the institutional reference point that will start the distribution first. All right. So price will start with accumulation, then it manipulates. All right. Let me get it correctly. Once it is done with manipulation, what next do you think will come? Distribution. So distribution will come, and the start of that distribution will have to be, you want to see shifting market structure either on Wednesday or towards the end of Tuesday. And once you have a shifting structure, that is to tell you that I am done with this. I am now taking a different direction. So shifting structure on Wednesday will mean price is going to locate an institutional reference point rightly placed for price to what? Boom, go up. So the distribution can come towards the end of Wednesday to Thursday and even to Friday. So you should expect that. So everything you're doing, you must look out for the weekly power of 3 opportunity, and then Friday comes in with what? Candle with thread back into the weekly range. So that is, you remember there is a strategy taught by ICT. It's called TGIF. Thank God it's Friday strategy. That price will have to retrace maybe to 20% or 15% of the entire weekly movement. So this is exactly what is happening. When you see prices retracing back into the range for the week. So I have just finished explaining this sketch. I hope it's explainable to you a lot. I will go to the charts now. All right, let's go to the charts. So this is our charts. All right, let's have a look at it from the perspective of this. So we can go to the weekly time frame and see what we are seeing. All right, this is the weekly time frame. So we have a bullish candle printout here. Let's just mark it out and then give it a try. We will break it down. So how do we break this guy down? We will break it down by simply taking it to the 1 hour time frame. All right. In the 1 hour time frame, you will basically have 5 days movement. 5 days movement. So how do you do that? You can simply use the events on TradingView. Simply right click. This can be applied to any financial markets. This is currencies anyway. If you go to settings, you go to events, you will see session breaks. So these session breaks will simply give it a delineation of every day. Right? Every day is here. So let's look at it. Can you see from my cursor? This is Monday. This is Monday. So let's have it. This is Monday range. All right. Price has just been ranging. I am not just giving you stories. You're going to see everything I'm saying. You're going to see practically everything I'm saying. So Monday had this range. Price did not give you any serious movement. So we have accumulation on Monday. All right. So notice what Tuesday is doing. Manipulative movement. How did it manipulate? It went creating this manipulative movement. Manipulation. Remember, I told you the manipulation is to make sure that you are pushed into going to the wrong direction. Those of you that say, okay, it's beginning to sell, these guys are simply looking at this as an opportunity to buy more, to take it up. So now notice what happened. Tuesday towards Wednesday, the manipulation happened. All right. The manipulation happened. And then you could literally see the shifting market structure. You may not see the shifting market structure on the 1 hour time frame. All right. You may be able to see it on the 15-minute time frame where the shifting structure came in handy. All right. Look at this. The shifting structure came in right here. Boom. You remember the shifting structure I told you? It came in right there. And then the movement started. This was a shift in market structure. Market structure shift. So you need to be careful. You need to be careful. Monday, Tuesday, you're going to see this accumulation and a little bit of manipulative movement coming in. So look at this. So how do you know that I have formed the low of the week? How do you know that you have formed the low of the week? Let me answer that question. You can only know when you finally see a shift in market structure. Notice what happened. I would have considered this as the manipulation. And it's Tuesday actually, all right? It is Tuesday. I would have considered it as my manipulation, but notice what happened. Is there any shift in market structure towards this movement? No. Somebody is saying, how about here? This is not a shift in market structure, guys. All right. So that is not a shift in structure. The only shift in market structure you've had was here, and it was on Tuesday, or even here to be more precise. This was a shift in structure. Anyway, you have 1, 2, 3 candles. They are rightly placed for you to see it. Notice what price did. Price came back right into the area. That was an entry on Wednesday. All right. On Wednesday, it came in. So we did not have the manipulation on Tuesday alone. It entered towards Wednesday and it created the shifting structure that was supposed to be seen on Wednesday, and the distribution started. All right. The distribution started. So all you should be doing on Thursday is to look for opportunity to continue the movement. Price moved up, another opportunity here. Boom, to move. Price, opportunity to move up to that area. To where? Look at this. To this area, and then price now closed inside the range on Friday. So this is the TGIF. If you go back to the weekly time frame, you will see that price have closed below. If we are to consider that candlestick, I don't want to delete everything. If we are to consider this candlestick, let's say 100% here, from here to here, 20% will be somewhere here. All right. So price will always come back to at least 20 or 15% to close. And you've seen price coming back. So this is the TGIF. It's mostly a strategy that comes on Friday, and you look for opportunity to trade it. I think I have a video on that. I don't want to explain it anymore. You can go and look for that video. Once you see a shift in market structure on the lower time frame, you can take the trade. So price coming in here, and let me delete this guy. So shifting structure, price coming back. So price traded down into that area, or even here, shifting structure. But there was a news this Friday, NFP. I wouldn't have considered that. High impact news are very, very bad news that you don't want to trade with them. I showed you the 5 powerful news you don't want to mess up with. Okay. So this is one of the reasons why you must consider some of these things. I'm not saying these things happens 100% of the time, but at least most of the time, 70% of the time, you will see the power of 3 concept working for the weekly, for the monthly, for the daily. All right, let me just quickly check another asset so we can see how powerful this is. It gem 40? I'm just picking a random asset. This is one of the assets I see some of my students use for trading. All right, gem 40. I never really traded this asset on a live account, but then it's not bad if we check it. Okay, so let's go back to the weekly. All right, weekly time frame. Weekly time frame. Remember that these things work powerfully when we have things like a trending market. So we have a trending market here. Let me just pick a random, or let's say this particular candlestick, so we can break it. All right, so we had the previous week printing this one, so we have high expectation, especially if we are targeting something. Okay, we are not seeing anything from the monthly, but then the weekly is printing this guy. Let's see how it is. We have this guy, just a replay. I want to see how price behaved with that candlestick, because we can see open, low, high, and the close. All right, so let's break it down. If I go to the 1 hour time frame, I hope I will see that data just quickly. All right, so this is the 1 hour time frame. All right, so let's start from Monday. We have 1, 2, 3, 4, 5. This is Monday. Yes, that is Monday. So let's start from it and see, did we have let's consider this as our accumulation. All right, that is our accumulation, guys. So what did you see? Price had a range here, and what happened after the range? Manipulation coming in on Tuesday, because this is Monday, Tuesday, and Wednesday. We will expect the shift in market structure is either from Tuesday or Wednesday. You will see it. Once you have the shift in structure, it is a go ahead for what? For the bullish movement. Until you have the shift in structure, you don't have the low of the week or the high of the week, if you're going bearish, for example. All right, so we will check if we have the shift in market structure at that point. All right, we did have the shift in market structure. This is it. Now, is there any shift in market structure on Monday? No, we only have this. But then Tuesday comes in with a shift in market structure here. Boom, a shift in market structure. And notice what price did. Price came back right into that institutional level, and then the movement started. All right, on that Tuesday, Wednesday continued the movement. Everything that will form on the other days is basically a continuation of that movement. All right, continuation of that movement, and then Friday will finally close inside the range. All right, so that is just a very basic explanation of it. And if you can check your weekly candles, you will see them, especially for trending markets, because you need to know that price is trending on the weekly, so you would be able to predict what will happen the next week. I hope this video helps you a lot, guys. I will be making more videos to explain this. Thank you guys for watching. See you in my next video.